houses in my neighborhood started to go for like 900, 950, 990 a square foot right around me. So I started running the numbers. I'm like, holy this is crazy.
That their servicing on those projects is completely outside of what they were projecting, which means they got to sell or else they're going to be in big trouble. It could put the U.S. real estate market into a serious problem here. And
what's up, everyone? Welcome back to the Adventure Capitalist Podcast. We are back again for another episode. My name's Austin Bronner. I'm here with my co-host, Cody Shirk. Cody, how you doing today, man?
I'm good. I'm excited to talk about what we're going to talk about today, which I'll let you reveal, but I just want to say this topic is something you and I we're experts in. We really are, because we've been in it. We've been deep in the ish of this topic.
Yeah,
I'm excited to dive into it because we know what we're talking about here.
We got skin in the game. Specifically in this topic. Today we were discussing off air. We're like, what would be an interesting episode? And one of the things we came up with was real estate that we're both involved with. Today, we're going to talk specifically about Austin real estate. I've been involved buying, building, renting houses in Austin, Texas since 2017, and have learned a ton, like built multiple houses there, have currently multiple rentals going. Austin's been on a crazy ride. So today we're kind of going to dive into some of the things that I learned. Cody's going to ask me some questions. We're going to dive into my experience, what I learned. And the goal is to share some things, really share a lot of the mistakes and learnings that I took away from being involved in this market, and also share some predictions about where it's going, because it is one of the hottest markets. It has been one of the hottest markets in the entire country. And there's still interesting opportunities in Austin, even though right now it's been on a downturn. So that's kind of the goal of today's episode. And we're going to go deeper as well into Texas a little bit, because it's a massive, massive real estate market.
Yeah. And I want to add too, like this is totally freestyle. We didn't plan this conversation. In fact, we're like, hey, let's wait to have this conversation until we're recording, because there's a lot of questions I have. I've been to your homes, and I know of them, not only what you had to go through building, but also now renting. But I don't know the story of you buying it. I don't really know the story of what's going on in the market right now. I have many friends that moved from California to Austin. Some people that moved from New York to Austin. I mean, like all over the place to Austin. Everyone's talking about it. You look at all the tech bros from Silicon Valley, a bunch of them moved to Austin. Totally. So Austin, I feel like is this bellwether of U.S. real estate. I'm not saying it's going to lead the way, but it's certainly been a hot topic for the past couple of years. And of course, Musk has been incredibly influential to the real estate market in Texas. And yeah, so I'm excited to dive into this and ask you questions that I wanted to a couple of days ago when we were talking. And we're like, hey, let's just wait to talk about it while we're recording, so we can get it in the most pure form as possible. I visited you a couple months ago in Austin. You have a unique property, which not only is unique to Austin, but it's also unique to the normal U.S., which I'll let you explain in a moment. But my first impression of Austin, if you've ever been there, is it's still a boom town. It's been a boom town for multiple years, but downtown you got tower cranes everywhere. There's construction. There's all kinds of weird things going on. It's kind of like a New York vibe with weird people, but there's also an entrepreneurial vibe. There's everything going on. So I want to know. My first question is
get over the hipster vibe.
Oh man,
as he was calling it, but it's really an Austin vibe.
Yeah, but the hipsters have invaded. I feel like there's been an invasion of hipsters. But my first question, let's just back up. What brought you to Austin in the first place? Because you were before the big migration or the invasion of hipsters. Yeah. You were like before that tidal wave. So what brought you there?
Yeah, my wife and I were living in New York City, and at the time I was running a marketing agency, and I was hiring a bunch of people for the business, and we were living in New York for about a year, and we enjoyed it, but we also really missed New York is a very special place to live. You have to be like all in on the city. You have to live in the city, not to do anything else. And the city will kind of like change and adapt you. There's no way you change and adapt New York City. It just doesn't happen. One of the things we missed there was the ability to be outside, be in nature. It was very expensive. I was building my business. I was like, we kind of discussed, we're like, well, let's let's take a look at Austin, because it seems to have the same business opportunities as New York, and literally it's half the price. At the time, it was half the price. And we moved there in in September of 2014, I believe.
So you were early. You were early compared to I'd say the pandemic era.
Way early,
like you were
compared
10
to the
years before
pandemic
almost.
area and to the pandemic people. But at the time, it felt like we were late.
Of course.
We're like, oh, this city feels like, the boom has already happened. So we moved in September, and we rented for a while with the goal of eventually buying a house. Well, actually, initially we didn't know how long we were going to be there. We thought we'd be there for like a year, but a year led to 2 years. And one of the things we realized was there's these interesting opportunities on the east side of Austin, Texas, where people were buying lots and they were building ADUs. The city of Austin put in this kind of, I would say it's an ordinance to increase urban density, allowing you to build larger accessory dwelling units. And that was very appealing to us because we saw these people who had built ADUs, rented them out, and then paid for the mortgage on their front house. And at the time, Airbnb was not as competitive as it is right now. So people were Airbnb-ing their houses, renting them, and paying for, in my view, what seemed like paying for the entire lot with the rental income from an ADU. We thought that's a great idea.
So you moved to Austin, you were renting for a while, saw this you thought you were late, but still a huge opportunity to get in the property market. It was cheap, especially compared to the rest of the US. And then you also saw this weird dynamic of these ADUs.
And that was new. We moved there and they changed it so that they wanted to increase the urban density. So they increased the size of the accessory dwelling units. So that was like, when that change happened, that created kind of an arbitrage where you could buy properties, build an ADU, rent it, and then if you did the debt correctly, you'd be able to pay for your expenses. And that the whole idea for us was, let's live mortgage free, right? Let's live mortgage free. Let's have our mortgage paid by the rental and live in the house. And that seems like a dream situation.
Yeah, and I know this has happened in several other markets. California, for example, changed the law on that. And there was a catalyst for a lot of specific cities that's with owners that said, hey, now there's an opportunity, like you said, to live debt free or net neutral, meaning you can rent out your ADU to cover your mortgage or your home, whether you're doing Airbnb, VRBO, or
exactly.
Whatever.
That's really what it is, net neutral.
Yeah, which is a pretty cool idea. I mean, it's a great feeling to live for free. I'm using air quotes there because there's a lot of sweat equity. So, okay, you notice this catalyst going on. Explain to us the buying process, or like what. I want to know. I want to know numbers too. We talked about this. If you're comfortable sharing numbers, because the Austin property market today is different than 2 years ago, but also different than 10 years ago. So tell us 2014. What's going on?
Well, 2014 we weren't really in it. By 2017, we decided we're like, okay, we're going to be here for a while. Let's start looking. We started looking in the fall of 2017. We knew where we wanted to build. We knew what we wanted to buy. We wanted to buy an old house, a bungalow style house in East Austin. We wanted to move into it, and we wanted to build an accessory dwelling unit behind it. That was our vision of what we wanted. So we just hit the streets. And at the time, it was still very competitive in Austin. Not as competitive as it got during COVID, which I'll talk about because that was an insane period of time. But it was still very competitive. And we were driving around looking at houses every weekend, going to open houses. We looked at probably like 30 to 40 houses over a period of a couple of months, put in offers, got beat out on a couple, got one. We got beat out on the one we really wanted initially. So we put in for another one, got accepted, went into kind of the option period, did inspections, found some crazy stuff, and that one fell through. And we, to be honest, were a little dejected. We'd been playing in this market for like 3 months and had been beat out a couple of times. It felt very competitive and things felt overpriced at the time. Finally, we're fully dejected. We're driving back after losing out on this property, and we see this house and these people this guy outside pounding a real estate for sale sign in. And it looks like exactly what we're looking for. And I pull over the car and I hop out. I'm like, hey, is this house going on the market? And he's like, yeah, it is actually this weekend. Like, if you want to get in touch, just text the real estate agent. So we do.
I'm laughing because I'm envisioning this is like a scene out of a movie. There's like an old man like pounding the stake in the grass, and you and your wife driving down the street. Oh, let's pull over, honey. Hey, you're like selling your house, and people listening to this are probably like, "Screw you, Austin. The prices are out of control now. I wish I was back there with you at that time."
We were 100% the gentrifying people of East Austin. There's no question. I mean, we literally pull over and we talk to them. We get our agent to talk to their agent. And at the time, I think it was listed for they were going to list it for 440, which we knew from being in the market that was a very low price for what it was, which was a full lot, the ability to build an accessory dwelling unit at the time in a great neighborhood. We've been seeing properties that were worse than that for like 550 for the last couple of months. So we knew it was a great opportunity. We had our agent put in, I think it was listed for 440. We had them put in an offer for 450 that day, and it closed over the weekend before it even went on the market.
Amazing. So I would call this, even though it's not technically because you use realtors, this is an off-market deal.
It was an off-market deal.
For people that don't know what that is, it's exactly what it sounds like. It's a deal that you snag either right as it's going on market, so no one else sees it, or it's you knock on someone's door and say, "Hey, let's make a transaction." And I will say, from my experience, so that's people don't realize everything is for sale in the world. Mm-hmm. Everything's for sale, and you just got to shoot your shot. And so I'm glad that, I'm glad you got the opportunity, but like people need to know, like that's a real thing in the real estate market, especially the US. It's off market deals is where there's a lot of opportunity.
This is my first learning from doing real estate in Austin, buying houses. This applies everywhere. It's if you know where you want to go, right? If you know the neighborhood you want to be in, driving around that neighborhood and really getting intimately to know all the houses and seeing what's going on and getting a pulse on it, you will find a deal because you will be the one that acts quicker than other people because you're going to be, we already had the 3 months of us looking around. We knew this was a deal instantly because we had so much experience in the neighborhood of what else was available. And so it allowed us to act much faster than anybody else. And that's really like the key that when I think about real estate going forward, we made money on, that was one of our first wins. We made money right away on the buy.
I think that's one of those sayings, think global, act local for real estate. So this is 2017, 18-ish. Rates are still really low. The political environment was X, Y, Z. You're thinking, okay, the world's pretty good right now. What's going to happen in the stock market? Okay, I'm thinking that, but then I'm going to act local. That's a great takeaway for real estate investors. There's no way that, or when you think local, you can become a market expert and beat out so much more of the market, the broader market, by just acting local. So I like that strategy too.
Totally. So we bought it for 450, put down, I think it's like 220. Yeah, we're in the game. And we right away, we had plans because it was an old house. It was 115 years old. We knew we didn't want to live in that house for that long, but we could tolerate living in there while we built an accessory dwelling unit behind. We almost right away turned around and started looking for an architect to help us design the ADU. And we found an architect. We started the building process. We started the design process. He helped us get connected with a contractor. We were very fortunate because we had a couple options of contractors. We went with one guy and then he pulled out like with a crazy excuse a couple days later. And we're like, wait, we dodged a bullet there. We found a contractor we really liked. That was so we closed December 2017. And we started the building process around summertime in 2018. And again, things always feel expensive. Even like back then when it was quote unquote cheap in Austin, it felt expensive. And that's just a good thing to remember. Like you typically, if you find something good, it's not going to feel cheap. It's going to feel still expensive. Austin's a boom market. It's been a boom market for a long time. So it's always kind of been going up. We start the construction process. For the most part, the first house that we built was on time, on target, generally fairly painless. Now I say that because we didn't know that much. When you don't know that much, when you're building a house, I think like the first house that you build as a amateur developer or, real estate investor, you're not going to know as much. So things are going to slide that wouldn't slide the second time.
Yeah, you don't know what you don't know.
You don't know what you don't know.
And things that you probably should have known didn't stress you out because you didn't even know something bad was happening. But let me back up because I want to know about the permitting process. Yeah. I know, I grew up in California. I'm very familiar with this process of bureaucracy and literally years to get a permit approved by the city or county or wherever you live in California. And the construction process is, of course, difficult, but sometimes the permitting process can be the toughest part of the equation. So in Austin for you, was that pretty clear cut or how did that work?
Permitting in downtown Austin kind of sucks. And it got progressively worse from 2018 till the second time we did We submitted plans in 2022. The difference between 2018 and 2022, it took a lot longer in 2022 to get plans approved. But the reality is people shit on the city of Austin permitting process compared to California and compared to some other places. I think it's okay. When you compare it to like rural Texas, where things happen like day of, or you don't need one, that's why people kind of say that it's bad. It's not terrible. It took us I think a couple of months.
Okay, so it's pretty straightforward. Okay, so back to you got your first house finished, completed. It was, I'm using air quotes, it was easy, even though hindsight, you probably missed some things. So tell us about
we just to
that
give some
first
context.
house.
We signed the construction contract in September of 2018. We got a certificate of occupancy 1 year and 1 month later. So it took us 1 year and a month to go from signing the construction contract with our builder to getting the house completed. That's why I said it was like, quote unquote, fairly easy. It just happened to be on target. And building in 2018 was different than building in 2022. We financed that with a construction loan, which really was a great deal for us because, I think I had $200,000 in debt on the house initially. And we were able to use a construction loan to finance the entire project of building the ADU, which is you pay interest on the amount of money deployed. So it's a really good deal in certain circumstances. And at that time, when interest rates were really low, it was an incredible tool for us to build this ADU. Does that make sense?
It totally makes sense, but I want to back up because I've been there. And just to clarify for the listeners, we're talking about a piece of property that can have 2 structures built on it.
Yep.
You purchased it and there was 1 structure on it, which was this old home.
Yep.
And the first project you did was the ADU, which is basically a house in the backyard. Is that correct?
Exactly.
Okay, so just to clarify, the first project you did was the second home on the property.
Was the second home, yep. And that was restricted to around 1,100 square feet.
Right. Okay. It restricted 1,100 square feet, and it was technically an ADU. That's what it was. Yep. So your second project, and I won't jump too far ahead, was the main home in the front of the property, and you had to tear down the old home to build that. I just wanted to make a note that I stayed in your ADU, this second backyard home, which is the first home you built. Super nice. And I think people are thinking, oh, it's like a tiny house shed or something like that. No, it's a legit home. I don't know how tall the ceilings are, but like 16, 18 feet tall. I mean, it's a very nice home, all hardwood, everything, full-size appliances, very nice place. And when I think of an ADU in California, I'm thinking of like a tough shed in someone's backyard. I mean, it's a real home. So totally. I want to make that clear.
No, totally. And I think this is a huge like learning from the building of the first house. Something that we really did well was, and I think about this with every real estate project going forward, is we aimed for we knew what the goal for this house was. And the goal for this house was to build the most premium Airbnb in the area that would appeal to either like tech workers who are coming into Austin and want to work long-term from a furnished apartment, or just people coming in for the weekend who want a nice place. So that was kind of our vision of what we're building the house for. And we also wanted to move into it and live in there while we were able to build the second house that was going to be a little bit larger.
So so you're living in the ADU, which is the home we just explained. And now you're like, all right, we're ready to tear down this front old century plus year old home.
To be honest, we didn't really want to. While I said that the project went well, the house, building the house, it went well. It's still a lot, right? And it took up a lot of energy for us. And at the time, my wife became pregnant, and we were thinking about, I think when we were making this decision, we were thinking about starting to try for our first child. And we knew that the house we were living in, the ADU, was going to be too small. We really didn't want to go and build a whole nother house because we knew that was going to be a lot. We thought maybe we can go move somewhere else, rent both these houses out, the old one because it was rented out, and the ADU, and then just go live somewhere else for a while and bite the bullet on this construction project later on. COVID hit, and it got absolutely bonkers in Austin, Texas. The real estate, this is when the numbers started to get like really messed up. We wanted to go move somewhere else, like a 3-bedroom, 4-bedroom house. We started to look around at these different houses, and we would go to open houses in Austin, and we would see 40 people lined up. 40 people everybody from New York and California just lining up to get into these houses. We'd been in the market since 2017, and we could just tell, it's like, this does not feel right. We looked at probably like 6 or 7 houses, and the prices were insane. They were getting so many offers. All these people were coming in from these different states, and we're like, this does not feel right. This feels like we're going to make a mistake if we make a purchase here. And on the flip side, I started to run the numbers on the construction for building our house in the front, and I got kind of a bid of how much per square foot, right? And I think at the time the initial bid that I got was about $350 per square foot. I own the property. Houses in my neighborhood started to go for like 900, 950, 990 a square foot right around me. So I started running the numbers. I'm like, this is insane. If we just build a house, then we could sell it on day one if we want to for like $1 million profit, when I started to like think about the numbers and ran them. So I was like, it doesn't make any sense to buy. It does make sense to build. We just decided, we're like, okay, even though my wife's pregnant and this seems like a big project, it seems like the right thing for us to do. We'll start the process of building. This was in 2022 of building this front unit, and fortunately we had our team, went back to our architect, we went back to our builder, and got the process going.
So you started in 2022 building the main house.
Yeah.
And what was the time period there until you were done?
So actually, it's interesting. I'm going to go back a little bit so let me give some numbers here. So 2019, we got into unit 2. We refinanced at the end of 2019. In February of 2021 was actually the time we began designing the new house. I was off by a year. So 2021, we began designing this new house. Sorry, working with the architect. It took like until January 2022 until we actually submitted plans to start the construction. There was like a bunch of stuff that was annoying that pushed the project back. But in January 2022, we actually submitted plans, started construction, got our permits in March. So I think it took 3 months actually to get the permits for that second one, which is what I was saying, that by 2022, it just got the permitting process got crazy.
So you got your permits in, you started construction, which is tearing down that old house, which, by the way, underrated part of a project. I've done that before. Oh, let's tear down a house. At least from my experience, it's pretty expensive to do that, and it's a lot more work than you think it is. So you tear down that house, start building a new one, and tell us the summary of that process.
Some things that I learned. I was getting fearful around interest rates at that time. So I was like, how am I going to finance this project? Because initially the last one I financed with a construction loan, but I got very nervous about financing this one with a construction loan, because a construction loan, what happens is that at the end of a construction loan, let's say that it's great during the construction because you only pay on the money deployed. So if the project takes a long time, you'll pay interest on the money that's being deployed in kind of the tranches that it's released. So it's great during the project, but at the end, you have to refinance into whatever rates are available at that time. Now, we had a 3.75% mortgage on our house, and I had this fear that we were going to have to refinance into some crazy high rates, which at the time, they weren't high yet, but they were going up. I instead did a cash out refinance on our house to try to maintain our 3.75 interest rate. Was a huge win. And I'll talk about this later on, like what I see in Austin now. Some of the biggest opportunities have come because of these construction loans and builders refining into insane rates. Anyway, permits approved March 14th. And then we start the building process. That whole process goes from March 14th to August 22nd, 2023. Our goal was 12 months. It took us 18 months. And the difference between building in 2022 and building in 2018, vast difference. Everything was more expensive. Everything took longer. There was so much more pressure on builders because they had more projects. And just to give some context, at the time I was telling you about running the numbers, I was thinking to myself, this is going to be great. We're going to, it's going to, our 350 square foot, we'll finish this project. And then on day one, if we want, we'll be able to sell it for like 900, because that's what everything was going for in my neighborhood. Didn't end up working out that way. From the time when we submitted our plans in January 2022 to the time we actually moved in, the market kind of turned over, and it was still very expensive to build. So I think at the end of the day, we had about a 28% overrun in costs. I think we got out for $425 a square foot, something like that. I could be off by a couple percentage points, and a 33% overrun in time. So, and the market then corrected about 15, 20% during that period. So it was a crazy confluence of events that led us. You never know what's going to happen when you actually develop a project. You can start with your projections, and then things change as you
Yeah.
go.
So just so I'm clear, you're saying the second home you built, which was the main home on the property,
Yep.
the actual value of that home, projected value, went down. Well, when you started the project, you thought it'd be worth X amount, and then when it was finished and you moved in, the market in Austin had already started cooling off. Is that
Totally.
correct? And the reason why I wanted to mention that is because, I think a lot of people are listening because they're interested in the U.S. real estate market, and Austin was probably one of, if not the first,
the hottest,
but also the first to turn, the first to kind of cool off.
For sure.
And so you're saying this right now, but as we speak, there's other markets throughout the U.S. just starting that process, even though this happened maybe a year or more ago for Austin, this cooling process. And
yes.
So you've been in the thick of it, I guess is what I'm saying, is that with that price appreciation cooling off.
Totally. I think it peaked. Let me give you, I got my numbers here. I think it peaked in 2022. And that's when it started the cooling off process. So that's when the houses were going crazy in my neighborhood, was in 2022. And then from then on, it's kind of like just down. I think it's down around 20%, 18 to 20%.
So as an outsider, I'm in Florida now. I'm originally from California. We had a very similar thing happen here in Florida. But for Austin, I'm assuming, and correct me if I'm wrong, I'm assuming you had people from California, New York, et cetera.
Yes.
They had a chunk of change from either their tech stocks that they own, maybe they're a tech employee, maybe they sold their house and wherever they're living, they've got a big pile of cash. They come to Austin, they're going, well, property prices are so cheap, and they line up and all these house sales
literally line up out the door.
Right. And they just don't even care about the price because it seems so cheap. So they're just plowing money into these homes. And then finally, first quarter, second quarter of 2022, people start saying, actually, you know what? Maybe we're getting a lot of control here. We're getting ahead of ourselves. And so that's when the price started to round out. So that run up in prices was obscene, crazy, and probably peaked faster, higher, more than it should have compared to the rest of the US.
For sure. And I think it also was when people realized that the world wasn't ending and cities were not going to be obsolete. Right.
Mm-hmm.
Like it was so unappealing to be in Venice Beach, California, Los Angeles, San Francisco, New York during COVID that it pushed a lot of people out.
Yeah. So a quick story, a side story, because I think people need to know this. My buddy in California, he lived in the Thousand Oaks area.
Yep.
During COVID, there was police cars driving around with a loudspeaker saying, "You cannot leave your home or you'll be arrested." So, and my buddy has kids, and he's like, "This is crazy." Meanwhile, Texas and Florida are going about living their life. He literally could not leave his home without the threat of being arrested. So, him and his wife decided, we got to get out of here. We'll pay pretty much anything.
We'll pay anything.
Yeah, we're literally locked in our homes. We got to get out of here. So they moved to Austin, and I want to make that clear that it's so crazy to think back in time now that was the reality, but that was a lot of the motivation for people to move to a city like Austin was. I want to leave my house. I want to go outside and forget about prices. I want some freedom here.
Totally. That was a massive driver. And the way that it worked with people, going from a place that was a higher value, right? It did feel cheaper. They could sell their house, get something larger in Austin, but it just ballooned the prices.
Yeah. And that same guy had put in it was a pre-built home, put in the deposit, and whatever, 6 months later when the home was ready, it was worth twice the amount of what he had put the deposit in. So he could have sold it right away, but again, he was just trying to escape California, and that's how rapidly those prices increased.
I mean, on my street, like there's a bunch of stuff because I live right in downtown Austin in East Austin, which is in the hottest, I would consider probably the hottest real estate market in the hottest real estate market. There's Zilker and East Austin were both kind of the hottest places to buy. On my street, 1,000 square foot house sold for $999 at the peak, 2022. And to someone from New York, moved in. I remember when that happened, I was like, holy shit, this is crazy. These are the same price. This is like a LA type price in Austin, Texas. That same house now, they're probably down their entire down payment, right? They're probably down $200,000. I don't think they could sell it for. They probably couldn't sell it for 800,000 right at this point, and that's big turn. And so this goes into like where I see some very interesting opportunities in Austin. This happened all over the city. Development was going. It is still going very fast, but it was going very fast, and particularly in my neighborhood or in downtown Austin. What people were doing is they're buying these old houses, scraping them, and then doing the 2 ADU builds. And a lot of these developers were doing these for years. And they would get a construction loan, finance it, refi into lower rates. Because of the way that these construction projects got delayed, like I said, mine was delayed about 33%. The permitting process got crazy. What would happen is people would, this is what happened. These developers started projects. They lasted way longer than they expected. They financed them with construction loans, and then they had to refi into like 7.5% rates. The difference between where, I'm at 3.75, the biggest win that I had was doing a cash out refi and financing my second build with kind of a combination of selling some equities and using the cash out refi, is I'm still locked into 3.75 rate. There's builders all over my neighborhood who are shelling out like $8,000 to $10,000 a month just to service the debt on unsold brand new spec houses.
So, and I want to reverse a second because I want to make this clear, because we're talking about right now, today. This is summer of 2024. We're talking about the current situation of real estate in Austin. What you're saying is you have these developers who started several years ago at low rates and have recently had to refinance out now that their project is done. Rates are, astronomically higher than before. So the debt that they're servicing on those projects is completely outside of what they were projecting, which means they got to sell or else they're going to be in big trouble. And that's the market right now. So that's one of the opportunities you think exists today.
That's where the market is right now. And it hasn't, because rates haven't come back down, and you've got, even if the developers are solvent, but it doesn't feel good to take an $8,000 hit every single month. So I'm watching these.
It's your carrying costs. You're going to get carrying costs paper cuts to death.
Exactly. And so you can go all over Austin, and because it's a city that generally, compared to some of the places in the West Coast, it's been, pro development. They've been developing a lot. They've been increasing the supply of houses pretty quickly. You've got these opportunities all over the city. And if you're a cash buyer and you can come in and offer lowball deals for some of these brand new houses, you can find deals. There's no question, because there are people that are in dire straits, specifically the developers that are in dire straits. That's my first thing that I would look at right now. I'm fortunately in a position where, so we recently moved from Austin, moved back to California. We're kind of in the process right now. Rented out our house. What I see in Austin.
Just to be clear, you rent out both homes because you have two homes in your property. You have your front home that you finished just a year or two ago, and then you have your ADU, which is the first home you're building. And so you had two homes on your property, and you've rented both of them out. Is that correct?
That's correct.
And are you able to cover your locked-in mortgage there?
Yes, and this is what I was saying about how important that. The fact that I was able to lock in a 3.75% rate. So I am able to, with renting out both homes and hiring a property manager, I clear probably around $1,000 a month. So that's a great situation and puts low pressure on me.
And by the way, finding those tenants, because I think this is an important part of the equation too, which is, yes, there are still people moving to Texas. They are still moving to Austin.
Yes.
The property market's kind of messed up right now, but there was a line of renters that were very interested in your home because they did not feel comfortable buying right now. So you were able to rent up both your homes.
The rental market in Austin, it really just makes sense to rent right now unless you're an all cash buyer. Because imagine it, and I had this conversation with multiple people that were looking at our house. They're like, I would like to buy a house like your house, but it would cost me almost twice as much to pay for the debt as to rent. So if they were to rent my house We rented one of the units out for $5,500 a month, the larger house. If they were to go put down a 20% down payment and then finance the rest, it would be almost $9,000 around that to buy the house.
Right.
So the rental market makes a lot of sense in Austin right now. And this is where the developers are getting kind of screwed, and where there's these opportunities is because you've got these developers who are paying $9,000-$10,000 a month to just the carrying cost, and they're trying to sell their house, but it's not moving because they're pricing it. A lot of people are pricing it at the old value. And I've watched these houses come down month after month after month. And this is even worse. So I'm talking about downtown Austin, which is still like a pretty resilient market. I think it's even worse if you go to some of the outlying areas like Dripping Springs.
And that's a topic I want to talk about a little bit. The Dripping Springs is a whole nother story we're going to touch on in a second. But just hang on one second. I want to back up just because I want to drive home the point of what you're getting at, which is there's these developers in Austin holding these properties and they're got these crazy carrying costs. But the one part we didn't mention is if the property market continues to go down in the coming months, a year, not only are they having these carrying costs, but their risk of not being able to get out from these mortgages, these loans, is increasing exponentially as property prices in general decrease. Because the lower that they have to sell at, the more that, or the less profit, or maybe they'll have to come out of pocket to pay off that debt they have. It's going to be a problem. So they're really motivated right now to sell, especially if they can break even, just get out of the project and escape with their butts.
And, to put it in perspective, if I had done a construction loan and then refied into the same rates and decided to move to California, I would be in the same position that they were in. And that's just like a good that was one of the things I've learned from the first property and the second property is just be really, really careful around your projections around what you think is going to happen. So make your projections. Like we have a goal for this house. We're like our stated goal for the second house, the larger one that we built, was to sell it for $1,000 a square foot in 3 years after construction was over. That's the goal. Things have changed in the market, but fortunately, I built in a big enough buffer to absorb for the changes of almost 30% in all directions. Took 30% longer, cost 30% more effectively, and the market corrected by 20%. So it's like paper cuts in every direction to bring down the return on the property. So I think that's a really important thing. If someone's thinking about these, it's very appealing to look at some of these people in your neighborhood. If you're, building an ADU, trying to live this net neutral thing, you just have to build in that it's very likely it's going to cost 30% more, take 30% longer, and then the market can correct.
Yeah, and I think that's a lesson for any investor, which is, hey, be careful with whatever you're doing, whether it's buying stocks or buying real estate. You got to build in some protection there. And I think in general, most novice investors, when they're dealing with real estate, they're used to a current market trend. So they're expecting the same thing to continue for a while. And I would say we're in generally unprecedented times right now because we're in a reversal of interest rate trends. This is a 40-year trend that's reversing as we speak. So if you're under the age of 40, you've never known a market that hasn't really increased. Other than the housing, I guess, crisis in 2008. And by the way, real estate came back after that. Real estate now we're much higher than it was then in terms of prices across the US. The other interesting thing that I wanted to touch on is your experience with refinancing, getting loans, construction loans, essentially playing this game of interest rates is something that most markets around the world don't deal with. For me personally, I've done lots of stuff in the US, so I'm familiar with what you're talking about.
Yeah.
But I've done also a lot of real estate investing outside of the US, and most real estate investing outside the US it's a cash game. Whatever cash you put in is what you are sinking into the project. And then you're expecting the returns on your rental income to cover that cash investment, not the finance investment, the cash investment, which it's easier to calculate because there's no leverage going on there. So it's much easier to calculate, but your returns in general are not going to be leveraged like they are in the US. So I think, as a US real estate investor, yes, you need to know all the processes that you went through to remodel, to build, permits and all that. Be careful about the leverage game. It can be very powerful, but it can go the other way and catch you big time in a bad position.
100%. That is the driver behind a lot of the excitement in real estate, is the fact that it's leveraged, and it's also why people get wiped out. And, there's a lot of possibility to get wiped out when you start doing construction loans. There's this risk of refinancing into something that you just don't know the rates. But again, to your point, it's been effectively, what you said, it's a 40-year trend.
Yeah,
I think the rates
trend.
they've been coming down for the last 40 years, right?
Yes.
Yeah.
Generally, and then they reversed in the past year. And to be clear, this is about 1980 to about 2020, which is 40 years. 1980, interest rates spiked around 14%. We're talking about the Fed funds rate. Real estate is a little bit different than that, but that's a 40-year period from 1980 to 2020. And we're now going back the other way. Now, everyone's going to say, interest rates might come down to the end of 2024, especially this is politically motivated for a party to get reelected to stimulate the economy. But if you look at historical charts or looking at interest rates over hundreds of years, it's generally a 40-year cycle. You're going to have the little blips up and down on the journey up and down, but we're generally in an upward path right now. And we're in the beginning of it. But for somebody who's younger, under the age of 40, who's never experienced this change, it's strange, and we're thinking this isn't normal. How long could this last? Well, historically speaking, it'll probably last for a while.
I don't know. When I think about real estate in the United States and the fact that the vast majority of Americans hold their wealth in their home, it's a very dangerous game to play when real estate prices are dropping. The vast majority of people feel like they are less wealthy than they were previously. And that leads to a lot of pressure on politicians, because when the vast majority of the population starts to feel less wealthy, they become less happy. And that's where I have questions about what's going to happen over the next. Honestly, I don't know. And I also feel like there's a real question of if the rates don't come down, are we as the United States going to be able to service our debt?
Yeah, of course. I think that's the worry in the back of everyone's brain. But I do want to point out that the majority of real estate in the U.S. is held by boomers who have been able to enter the market at very low prices, low rates, and continually refinance out of their home to either reinvest in their home or reinvest into a high-level lifestyle. Conversely to that, you have a Gen Z population, which is, these people in their 20s entering the working world with 10,000 grand in their pockets saying, wait, what? I got to go to Austin and lay down $1 million cash offer for my starter home? No, that's not remotely like, that's just craziness. And so, like you said, first of all, it's an unhappy population of coming up, but also it could put the U.S. real estate market into a serious problem here. And again, we can go on for a while about that. Let's do that for a second, because I want to focus on Austin for one more moment, and I also want to talk about Dripping Springs, because Dripping Springs, I don't think anybody really knows about it. No one really talks about it. It's a high-end community outside of Austin. And would you mind giving us a quick rundown of what Dripping Springs is and what it was before right now?
Yeah. So Dripping Springs is about 45 minutes outside of Austin. And if you kind of go a little bit to the west, kind of southwest of Austin is where Dripping Springs is based. You can drive out there. From my house to Dripping Springs takes about 45 minutes. And out there, it's a much more like rural area. And this town became a place that a lot of people who lived in Austin, who wanted more space and larger homes, maybe like a ranch type life, decided to move to. For a long time, celebrities had houses out there, right? McConaughey has a house, like all kind of the Austin celebrities had ranches out in Dripping Springs. During COVID, well, one of the things that happened is people wanted more space. They wanted to be out on their own property, be away from people. Not only was Austin, the city of Austin, booming, but Dripping Springs was booming almost as much or more than the city of Austin, because Austinites were moving out to Dripping Springs. And then people were coming in from outside the state and moving outside there.
And I will say that every single city in the U.S. has this scenario.
Exactly.
Los Angeles, San Francisco, Seattle, Austin, Dallas, New York, Miami, all of these cities have like a second kind of secret city that's half hour, 45 minutes away, where the really wealthy people have bought their escape places where there's kind of under the radar. They don't mind commuting a half hour to the major city center, but they have the retreat that's outside of the major city. And Dripping Springs is that city for Austin. And I don't know if we want to name drop here, but I know a lot of pretty big names that have bought real estate there in the past couple of years. I know some of them are personal friends of yours. There's a big tech guy that just bought actually this year. He's on the All In podcast. And so people will know who that guy is, but he just bought there recently. And I think this city is definitely probably going to be really noteworthy for what's going on right now, but it could be replicated to any major U.S. city as something that's probably going to echo in these other property markets.
For sure. And I think this one has kind of led a little bit because it boomed so hard during COVID, where other places maybe didn't boom during COVID. What's interesting is this whole market, because you could go buy land out there, traditionally the land had been pretty cheap. One, there's not a lot of water out there. So there's some challenges.
But it's Dripping Springs. That sounds like water.
I know, right? But this whole area just boomed during COVID. I know somebody who bought a house, I think a big ranch for about, I want to say around like 2.8, something like that, million, put about $500,000 into it. And then this was during the COVID time, during the same time I was building, decided they wanted to move and relisted it for literally the same price as before the $500,000 was into it. So if you think about how the market is corrected in Austin and then how the market is corrected in Dripping Springs, you're looking at over 20-25% market correction out in Dripping Springs because things got so crazy with people desiring to have their own like ranch space away from people type environment. That was so appealing during COVID. Not as appealing now, especially with the heat in Austin and people kind of moving back to California or wherever. So there's a lot of opportunities down there as well to go pick up properties that are going to be way off what they were a couple of years ago. And I see that kind of the only place that I see Dripping Springs as being pretty overvalued right now. On the flip side, there's another area called Bastrop, which is to the east. And Bastrop is interesting because this is where Elon is building everything. And if you take the wealthiest person in the world who's committed to building large companies in an area, what's going to happen? They're going to attract wealthy tech workers and people from Tesla. Everyone's moving to this area. So directly to the east, it's not traditionally been as sexy as Dripping Springs, but I see it as a place where it's still kind of undervalued over there.
That's exactly what the Walmart family did. And I forget the city in Arkansas. But what you're saying is very wealthy.
Right?
Yeah, exactly.
Yeah.
Right. No, is it that? I feel like we got to go back.
I don't know.
We're going to get corrected on this. This is an obvious one. But that city, the city where the Walton family is from Walmart, has boomed because they've set up shop there. So what you're saying where Musk is putting a lot of his companies, and by the way, he just announced that X is moving out of California to that area. It's going to bring obviously employees, but there's so many trickle down effects from those employees from that wealth that starts to create a new economy in these other cities.
This was our thesis with growing and building in East Austin specifically, because East Austin and further east is where all of Elon's companies are being built. So the Tesla Gigafactory is within 10 minutes of my house. There's more stuff being built out there. And I still think it's going to continue to boom and boom and boom, specifically going east. And I think that there's opportunities to go buy stuff out there. It's not as developed as Dripping Springs. It did not boom as much. Yeah, there's opportunity in that direction.
Yeah, and so I think that's the bigger story of Texas. And a side story for me, I grew up outside of Los Angeles area in a pretty rural area, relatively. Going to the grocery store was a half-hour drive. I had no friends within miles of me. I was very much on my own. And I say this because unless you've grown up that way, it's a certain lifestyle most people are not familiar with. And during COVID, everyone was watching Yellowstone and having this calling to nature and wanting, I'm going to be a cowboy. I want to live out in the country. I want to have a farm. And that lifestyle, it's freaking hard. It's gnarly, meaning it's lonely. It's tough. It's physically tough. You're got to endure a lot more weather than living in a city. It's very inconvenient. Driving to the grocery store, getting somebody to come out and do work for you, hiring people, whatever it is. It's a different lifestyle that looks sexy and adventurous and very Americana on the screen, but living it is completely different. So,
I mean, just right now, I'll give you an example. I'm up on Orcas Island,
Mhm.
which is up in the San Juan Islands, recording this podcast from Orcas Island. And my parents bought a house up here. They've always wanted to buy a house up here. And they bought one this last year. And we were up here and the sink backed up. Normally, if you live in any city or near a city, you will be able to call a plumber and get some help. So up here, though, doesn't work like that. First, so we call the plumbers.
I get the snake out. My dad's like, oh yeah, stick the thing down there. I'm pulling wads of hair and whatever, like a gopher out of the pipe or something.
Totally.
Country
so
living.
First step, we try to, me and the neighbor snake it. We can't fix it. We're like, okay, well, we're going to actually have to get a plumber here because we can't do it ourselves. So we call the plumbers on the island. No joke. We get calls back from 2 of the 4 plumbers that are on the island. 2 of them tell us, sorry, we can't show up for 2 months. We're booked out for the next 2 months. You are on your own for literally 2 months. So I've arranged like a system to do kind of like bucket dishes for a while, but you're just on your own.
Yeah, it's a different lifestyle. And yeah. I think what I was getting at before is I think there was a whole portion of the U.S. population, not a huge percentage, but there was, meaningful. That's why Idaho prices went up insane. Montana prices went up insane. People who moved out to these lifestyles. And right now, a lot of those people are having a second guess about, hey, first of all, do I want to live this lifestyle? It's really difficult. But second of all, I overpaid for my property. What do I do here? Do I ride this thing out and, crush my bank account? Or do I cut and run? And for Dripping Springs, I'm not saying that that's the exact situation, but maybe it is. Maybe people out there wanted a little hobby farm. I'm going to raise pigs and, ride horses. Are kind of going, oh, what am I doing out here? And maybe that's what's happening right now with those property prices.
It's no doubt what's happening. And I've seen it. There's personal experience of people making different decisions. And so I think that just, it's cyclical. We're up. The way that I see the Austin market is that it was on a pretty, fast but gradual pace of growth. Then it exploded 2021, 2022. It turned over. We've almost regressed exactly to the mean of where it would be if it had just stayed progressing the same way. I think it'll overcorrect a little bit and then continue to progress forward because it still is an incredible market. People want to move there. It's a compelling value proposition, especially for younger people. Like, where are you going to move? If you graduate from college, you're looking for opportunities. It's either you go move to New York, Los Angeles, San Francisco is not as compelling. It's still compelling, but not as compelling, or Austin. And that's really what those are like the areas that are very, very exciting for younger workers. Other cities as well, but I just have noticed from the people that rented our house in downtown Austin, it's the people that are moving in their late 20s, early 30s, have a very great career, have benefited from the tech boom. They're still moving there. Moving there.
So let's talk about that. Let's talk about, so first of all, just to summarize this, the opportunity right now in Austin, and I was there a couple months ago, staged your place. I saw lots of brand new homes, super everywhere. Nice. Very, very nice homes. I'm not talking, lipstick on a pig type home, like brand new construction, architecturally, very elegant. The opportunity right now is to go and make cash offers. And side note on cash offers, for someone who says, oh, I don't have $1 million in cash, there's always a way to make an offer that's cash, even though you either have investors on the side or you have some financing from a bank or from a private lender. There's always a way to make a cash offer if you really try to do your homework prior. So the opportunity in Austin is to buy cash on one of these projects where a developer wants to get out. But as you're saying, people are still moving to Austin. They're still moving to Texas, just like they're still moving to Florida. People in general in the U.S. are moving away from high tax, highly bureaucratic places that's difficult to do business, and they're still migrating to lower tax states that have booming economies. And the reality is that Texas is still on the upswing there. For example, California had a loss of population last year.
Yep.
Texas had a gain. That trend is still happening. So people
Yeah.
are still moving there.
My guess is this year California will have a gain in population. Texas will have less of a gain, but still a gain. And just my summary of the Austin real estate is like right now, the opportunity to me is you either rent. There's actually really good rentals right now. If you're looking, or you go in and you make a low ball offer on a house, and you're able to either pay for it in cash and not finance it, because the financing is what kills you. And yeah, so I think there's going to be some recorrection on prices still, my guess, but at the end of the day, like the same sort of thing that holds true today, that held true for me in 2017, is like good stuff isn't going to feel cheap. It's just, you might be able to find houses outside the city that are cheaper, but good quality real estate doesn't generally feel that cheap.
Well, that's what a market is typically. A market is when a seller feels like, I'm giving this away, and the buyer thinks, this is too expensive. So if you're thinking, this is maybe a little too expensive, and it kind of hurts you a little bit, typically the best deals are made when the buyer and seller both feel a little bit uncomfortable about it. So if you're a buyer thinking, this might be there's another buyer who might beat you out on that. So that's typically a sign of a healthy market, is what you're explaining.
For sure. For sure.
Cool. So just to wrap this thing up, I want to talk a little bit about Texas as a whole. I know we just did, but what do you think about Dallas, Houston, San Antonio? Do you think Austin's still going to be the crown jewel, or do you think people are still going to be moving into the state? And do you know much about those cities and what's going on there?
So I will say that I am very well versed in Austin, not so well versed in some of the other areas. I think that there's like the triangle. People always talk about the triangle of like Dallas, Houston, Austin, San Antonio, kind of that area as being the central Texas area that is great opportunity. I think that what I think about when I think about Texas real estate is that we have an idea in America about what the American dream is. And it's having a house with a white picket fence and a yard. And for the most part, that is very inaccessible in most of the larger cities in the United States. It's still accessible in Texas. It's still accessible in Dallas. It's still accessible in Houston. Now, the downside of those areas is that it is very hot in the summertime, but there's still affordable houses out there. And I think that will continue to be a draw for people for quite some time. It's a low tax state, and it's going to continue to grow. I just think we're just in this cycle of like a slight recorrection, and people who panicked and moved from the coasts, who are actually from the coasts. Like for me, for example, I grew up on the West Coast. All my family is there. While I love being in Austin, and I love all my friends there, it's very hard to be away from our family. And I think a lot of decisions like that will be made for people who made this decision to go and move out. They're going to come move back because of family and other circumstances they'll swing things back.
Yeah, and just to be the devil's advocate here, I was just in California, and again, I was born and raised. My soul is still there. I love that place. I think it's the most beautiful place in the world. But I was talking to a lot of my childhood friends, a lot of my family friends, and they always ask, because I moved to Florida recently, they always ask like, well, how is it there? And I still think there's a large population in California that are diehard Californians, but they're getting sick of what's going on, and they're still considering it. And the people in Texas, in Florida, and these other states who are getting this migration don't realize that there are still people considering making that move. Whether or not that happens, we'll see. But like you said, the American dream of being in Texas with a big house, big yard, all that is mostly unobtainable in California and other states that are similarly high taxed. So don't be surprised if that market in Texas keeps pumping along for quite some time.
Oh, I think both things are true. I think it overcorrected, and now will continue to grow in a slight direction.
Yeah, so real estate's going to be a trend that we're always going to talk about. I think we'll probably do another episode on Florida next, but we'll also be doing some international real estate topics coming up. And we'll certainly have to revisit the Texas story because, well, you got your money there and you got property there and you're in for the ride, whether you like it or not.
I'm in for the ride for sure. I'm in for the ride. And yeah, just it's been an incredible learning experience going through this process. And yeah, if anyone has questions or wants to reach out, you just email me, Austin at adventurecapitalist.com. Yeah, hope you guys enjoyed this episode. Hope it was valuable. And we'll talk to you guys soon.
Thanks.